One new gold stock making big headlines since its start last April, acquiring gold for $5 to $10 per ounce in the ground, which is dramatically lower than the $50 to $100 per ounce in the ground other companies have been paying. To learn more about what hard asset investors are calling a mineral bank, visit futuremoneytrends.com/investright. Greetings and thank you for joining us at futuremoneytrends.com. I have a very special guest for us today. He's a mentor to many people in the investment community, a regular keynote speaker. He's someone who covers technology, energy, gold, but he is also somebody who has a special focus on gold when he looks at the world and the monetary policy. So it's a contrarian investor and a person who I highly respect. It's Mr. Jay Taylor. He is the editor of Jay Taylor's Gold and Energy and Technology Stocks newsletter. He's also the host of the popular radio show Turning Hard Times into Good Times, which is extremely important because you don't want to just go into a prepper mentality. You want to prepare for the worst, but you have to move forward in life. Jay, thank you so much for joining us.
Oh, it's my pleasure, Daniel. Thanks for having me.
Well, hey, it's great to have you on the show. I wanted to get you on the show to discuss how 2015, the year, is setting us up for the future. And this year, we're about a week into the year, actually exactly 1 week into the year. And man, we've got China imploding. We've got gold and silver rising. However, the other industrial metals and precious metals are actually still palladium is making a new, I believe, a 5-year low. Meanwhile, silver and gold are rallying. So, I guess to start us off with 2015, looking at the setup of 2015, where stocks kind of peaked out and gold maybe perhaps bottomed out. And correct me if I'm wrong and getting ahead of myself. But what are some important things that happened in 2015? The Fed is going to reap the fruits of their labor of 2016. So anyway, 2015 in review. What were your thoughts?
Yeah, I think 2015 is a transitional year for the markets. You know, the equity markets, the S&P, for example, went nowhere during the year. It was basically flat. But I think beyond the equity markets and the debt markets, of course, we started to see them, especially the high yield markets, come under a tremendous amount of strain as the underlying economy isn't anywhere nearly as good as it's purported to be by government statistics and Federal Reserve talk. But I think also what we have to look at are some geopolitical stresses and strains that are going on, in particular in the Middle East. And I think, you know, the really big picture that I think probably most Americans aren't at all focused on is the potential for the demise of the petrodollar. The petrodollar was established by Kissinger during the Nixon years, right after Nixon took the dollar off the gold standard. And so the United States used its mighty power and relationships with Saudi Arabia and other countries to force what has been a petrodollar standard. How do you gain value for the dollar if it no longer has any intrinsic value to it? Well, you force countries around the world to use the dollar to buy their oil and to use the dollar for trade of all kinds. And so a lot of that, though, has been enforced by the United States military and the control of the markets and the geopolitical or the politics of internal governments. And what we're seeing, the Chinese and the Russians are not very happy about this, especially when the United States sends the likes of its NGOs, the George Soroses of this world, into places like the Ukraine. And this, of course, is a pattern that's gone on in the United States since its foreign policy since 1953, when we overthrew Mosaddegh, the elected official of Iran. And it all evolves around oil and being able to control the oil markets. Well, now we're seeing China and Russia very much object to this. And when their own sovereignty is being threatened by the American military-industrial complex. And so the BRICS have set up a competing system, if you will, a competing banking system to compete with the petrodollar system. And they have their own development banks and their own trading. And more recently, Russia's been selling a lot of oil to China in exchange not for dollars, but for gold. And so there's a lot of things going on. The Chinese importing huge amounts of gold. and of course now recently being accepted into as one of the currencies in the basket of SDRs. So I think a real big picture thing that it never gets mentioned on the mainstream media is this issue of the petrodollar and its potential demise. We're seeing the United States losing its influence in the Middle East to a very great extent. Russia is building and gaining a lot of strength in the Middle East, certainly has been aligned with Iran, but more recently has drawn much closer to Iraq. And so the Saudis are very unhappy about a lot of the policies that the United States has undertaken with Iran. They're unhappy about the United States production of oil, of course, and petrol, and gas and so forth, and so less reliance on them. So what we're seeing is a war, let's say a market share war that's being undertaken. The Saudis have even talked now about drawing closer to Russia, and I suspect that has to do with trying to control the oil markets, perhaps in order to gain some control of it. But Russia is producing more oil now than it's produced since the fall of the Soviet Union. And so I think what's happening is the BRIC countries are really sort of isolating themselves, partially because of our sanctions. We're basically forcing them to set up their own trading system when we threaten to take away their ability to trade with us in various ways through sanctions and also through the interbanking system. And so I think what we've got is, in part, one of the reasons that the Western world's economies are so weak is because that part of the world, the BRICS, are sort of isolating themselves and doing their own trade amongst themselves. And so I think this is a big theme that we need to be very cognizant of. And, why are the Chinese importing so much gold, huge amounts of gold? It isn't much more than they are reporting in anything that the United States officials are talking about. And they're setting up their own system of trade. So I think this is a theme that we need to watch. And I think one of the main reasons that the oil price is so low is because these major countries are fighting each other for market share. And in the meantime, the United States' influence is not what it was in the Middle East. Of course, you'll have the Republican candidates saying how we need to have a really strong military presence and that Obama was too weak and all that. I think it's a bigger picture than that. And I think that, that we're really, the United States power is reaching its limits, and a no-fly zone over the islands that China has created in the ocean. Things are really getting very, very tense. And I think it really evolves around the petrodollar and the ability for the United States to print endless amounts of money and use it then to send its military and to threaten countries' sovereignty, the sovereignty of Russia, the sovereignty of China. At least that's the way those countries see it and perceive it. And so, I think this is a really important issue in terms of the overall markets. Now, in the meantime, the United States in 2015 pumped up its markets with massive amounts of money creation. And for whatever reason, the Fed now is deciding it's got to raise rates. I suspect it has something to do with the Chinese and the Russians and others deciding they no longer want to hold U.S. treasuries. And so maybe we're going to have to be honest about it and raise rates in order for the United States to fund its deficits. And it's going to have more deficits. It looks like we're turning more to fiscal policy. So there's an awful lot to watch. Of course, the high yield markets are coming under some stress now as we finish at the end of 2015. A lot of stress. And the equity markets are, as we enter this new year, coming under a lot of stress. I think it's important to note the former president and CEO of the Federal Reserve Bank of Dallas, Richard Fisher, has recently said, don't blame it all on the Chinese, though. He says, we've propped up our own stock market over the last number of years by quantitative easing. And so the United States equity markets is selling at enormously overvalued levels. And of course, last year, the equity market was much weaker than it looked to be, with the vast majority of stocks declining in value, with a few really big name companies holding up the indices. So I think what we're seeing here is a transitional year, 2015. Michael Oliver, a technical analyst that I have on my radio show frequently, makes the point. His work is suggesting that we have a tectonic shift coming in 2016, with debt and equity markets headed lower, and probably the precious metals and the commodities eventually perhaps bottoming out in 2016 and heading higher. Time will tell. But I think that because, I just think 2015, for these geopolitical reasons as well as economic reasons, is a very significant transitional year, which sets us up for, I think, what could be a very interesting, to say the least, 2016.
Well, yeah, and it was also 7 years from the last major crisis we had, and a lot of things do move in 7-year cycles.
Right.
Looking at 2016, kind of the last 6 months of 2015, and then here to the first week of 2016, it seems like do you think there's a trend being confirmed where the precious metals, and I'm going to throw silver in with gold, because I know it is a precious metal, but silver has essentially from 2009 to 2014, traded very closely to platinum and palladium, but silver seems to have decoupled itself, and gold and silver seem to have decoupled themselves from the commodities themselves. Because here you have oil plunging, other commodities plunging. I mean, when I look at 2015 numbers with platinum and palladium down 30%, iron ore down 45%, but here, gold and silver, they were only down 10%, and now this year, they're the only ones that are up.
Right.
Do you think the precious metals have now kind of decoupled themselves where they're a monetary metal?
I think that's very, very likely the case. My partner, Chen Lin, who watches what's going on in China very closely, suggests he's hearing some early rumors of Chinese, because of the various problems, going into gold more, that is, individuals selling some of their other assets and buying some gold. Of course, the Chinese have been importing gold like crazy, but it makes sense that that platinum and palladium, given what I think is a global recession already, and probably something worse than that, possibly, that platinum and palladium perform so poorly because they are purely industrial metals. They certainly do have a monetary component. I suppose you could argue that, given the nature of them. But silver and gold, of course, gold and then silver, I think, is the second best monetary metal there that has, that on the face of the earth. And so I'm not surprised that that's happening as there's growing concerns about the international banking system, about the chaos in the markets in the early stages here.
Do you think the central planners, because they're so heavily involved in the actual stock market and indexes, the government, of course, has got their back against the wall with these pensions, do you think that a crash is like a crash like '08 or 1929? Do you think a crash is just not really in the cards in today's environment, that the Fed is always going to do something to keep pumping it up? Maybe we'll have a 10 or 20% correction, but it's not going to be a 50 to 75% correction.
Yeah, it's hard to say. They'll do what they can to try to keep things from crashing. But, that's always been the case. And we had a crash anyway in 2008, 2009. So, it's just a question of when they no longer can control the situation. And, it's hard to say. I take it, for example, a little earlier today, I sold a short position on the S&P 500 because I said, oh, well, here we go again. I'm sure they're in there pumping up and buying the S&P 500, and we'll see where that goes. But, it can only go so long. And the main thing is the underlying economy is getting worse and worse. That's the problem, and that's why those metals, the industrial metals, are doing so poorly. So I don't really know. I think it's impossible to know whether the bottom has been reached in gold. I think we could still see $1,000 possibly, but I think we're very near the end of it, and we may have seen the lows. So I think 2016, or at least part of it, is still a transitional period. I'm really out of necessity, really focusing because there's some very exciting things going on in the tech space and in the energy space. I worked very closely with my colleague and partner Chen Lin, and working more closely this year with him because he's just such a brilliant investor and he's come out with so many great ideas. A couple of names in the energy space, Pan Orient Energy, for example, is selling below its cash value now, has strong, even at these prices, strong cash flows from Thailand in oil, and it's got some natural gas in Canada, and it's going to be paying out a 40-cent dividend. It's selling at about 88 cents now. Wow. The company it's just so rich, and So that's one I like. And then Canacol Energy, a company that's cash flowing very strongly and will increase its cash flow out of Colombia with natural gas. These are stocks that Chen Lin has recommended, and I have in my newsletter as well, because they're very strong balance sheets, very strong cash flow. And at some point here, we are going to see a bottom in the energy space. And of course, natural gas is a market that is unique depending on where it is and depending on market conditions. So Canacol looks very, very good. And then there's some biotech stocks that are really exciting that Chen brought to my attention. Sarepta Therapeutics is a company that's been covered widely in Barron's. It's got a drug for muscular dystrophy that really cures muscular dystrophy for young boys. And so there's a battle going on with the FDA, and I suspect the existing larger pharmaceutical companies are objecting to the passage of this drug, but it looks like it could go through. And that's a huge winner, as well as another one called Sorrento Therapeutics. And they have some breakthrough cancer immune drugs. And what is really exciting about this, it seems as though they may be on the verge of being able to deliver those immune drugs inside the cell, and this would be the first time that's ever happened. Always in the past, these drugs have been to the membrane, cell membrane, or outside of the cell. So there's some potential, and Chen knows these companies, knows the CEO, is involved with conference calls and so forth. Sorrento Therapeutics and Sarepta Therapeutics, very exciting stories that I'm covering in my newsletter, and also have Chen on my on my radio show frequently to talk about them. And then another thing that Chen just brought to my attention and to his readers' attention is lithium. For the longest time, Daniel, of course, the companies in Vancouver, the mining companies, exploration companies, talking about lithium and how they, it's going to be a big thing, and when due to Tesla and the batteries and all that. Well, sure, but now Chen has found out from his contacts in China that there really is a huge shortage of lithium in China, and the price of lithium has risen very dramatically in the last few weeks. So Chen has gone out and recommended some lithium stocks, and there's a couple that I'm looking at now as well. One, a junior in Canada that looks very exciting. So I think there's a lot to be excited about. Whether gold, it could break in a big way this year. I mean, I think we could be on the verge of a massive, it all depends on the breakdown of the petrodollar, I think. And if we're close to that breakdown of the petrodollar, and I'm not rooting for that, believe me, because there's going to be disruptions and I think hardships that nobody wants to see. But if they're going to come, we want to be ready for them as much as we can. So,
Jay, I have one last question for you. So the petrodollar, if it ceases to exist and the U.S. dollar loses essentially its reserve status by the markets or by just having another alternative like these BRICS nations currencies, what happens to if there's a major crisis in the U.S. dollar? This is a popular question I get from people. What happens to contracts that are in dollars? I mean, are they essentially converted to the new currency? Are they just defaulted on, like insurance, a whole life insurance, or a real estate contract, like a mortgage?
Yeah. That's a question I don't have an answer to, and I suppose it's going to have a lot to do with the shape of the breakdown and how it occurs and how government responds to it. I mean, if we were to shift to a hyperinflation from what is a deflationary environment now, which I think is very possible, and it really all hinges on the dollar. If the dollar loses its value massively, all of a sudden, and I don't expect that to happen, but if that were to happen, then, what would we have? Probably, like a lot of hyperinflationary economies have just, cut zeros off the end of the numbers and continued on with them. I don't know. We will have to wait and see and hope and pray that it doesn't happen, actually. But in the meantime, I think the same thing that people should have always been doing, providing for their safety, their family's safety as best they can, with food and energy and things that you need in a crisis, whether or not geopolitical or just natural tragedies that take place. People need to do that, and certainly having some cash on the side and some gold and silver and that sort of thing makes a lot of sense. I would say that I think that there's going to be some extraordinary potential gainers in the junior gold space when this thing finally does turn around. And I'm starting to focus more on the majors until we get out of this rut. I've got 40% of my portfolio in gold shares, 40 in energy and energy tech stocks this year. and then I have a 10% short in the S&P and a 10% short on high yield. That's sort of the way I've positioned myself to the start of the year. But Daniel, you always have to be ready to make changes, because one thing we can be certain of is that things never stay the same.
Well, hey, if you'd like to get a hold of Jay or subscribe to his newsletter, you can get some of those picks. He also talked about lithium as an investment, which is something that we also like at Future Money Trends, and Jay said he had a few picks for you. Just go to jtaylormedia.com. You can subscribe to Jay Taylor's Gold and Technology Stocks newsletter, and you can also listen to his show, Turning Hard Times into Good Times. I love the name of that show. Jay, thank you so much for joining us. I really appreciate your time.
Well, thank you, Daniel.